Today I am in Hermosa Beach and Lizzie is going to be joining me on the walk once again. You know, we're only a few blocks away from the beach here, and you just go a few blocks that way and it's like total pandemonium. And I found this nice little quiet neighborhood here that I wanted to walk through. Maybe we'll see some houses for sale, and I haven't done a video in Hermosa yet, so it's kind of cool to check this area out. Now here's something crazy. You know, we already know that most home buyers are facing big time unaffordability challenges, but I'll bet you didn't know that just from this year to last year, first time home buyers need to be making 13% more income in 2023 just to be able to afford a home. Now, that means a first time home buyer needs to be earning about $64,500 per year to afford the typical US starter home. And the reason why this is crazy is because, let's face it, most young people, most people who are looking to get into their first home just don't make this kind of money. And when you go to places like Miami, where I'm from, if you want to buy a typical starter home in Miami, you need to be earning about 80 grand a year right now, guys. And that's just for one person, okay? You're talking a single person. And that means you can only buy a $300,000 home in Miami. And for anybody who's been following along on my channel for quite some time, you probably realize we don't pass any houses that are $300,000. And I can tell you firsthand, being from that area, that any house you're going to find in Miami at that price is going to be in a pretty bad area, and you're not going to want to live there, trust me. And sure, you could buy a condo for $300,000, but here's the kicker. Actually, you'll be qualifying for a much cheaper condo than $300,000 because you have to factor in the HOA costs, and those are absolutely astronomical now. So if you could buy a $300,000 single family home, you might only be able to qualify for, say, a $220,000 condo. You know, the numbers change drastically when you're looking to apply for buying a home, and your only options on the table are condos or townhouses that include HOA dues. Because one thing you got to remember is when you get qualified for a mortgage, your lender is going to factor in everything that's going to accumulate to your monthly payment. So when you're buying a house, you don't have the HOA dues, so you can potentially qualify to buy a more expensive house. But when you're buying a condo, now you have that $500, $600, $700 a month HOA fee that eats into your monthly budget, therefore helping you qualify for even less. So that is a big downside to this. And it gets even worse in other parts of the country. You go up to New Jersey, the typical first-time home buyer needs to earn almost $90,000 a year, guys, $88,800, which is up 21% in 1 year. So how many people are getting a 21% jump in income in just 1 year to be able to afford to buy a home? And this, on top of the fact that mortgage rates are hovering at 7%, is one of the #1 reasons why you're not going to see any uptick in the housing market, at least not until something changes. People need to make way more money, or interest rates need to come down substantially in order for that to change. And I just don't see that happening anytime soon. And that's why things are at a complete standstill at the moment. Right now, the typical starter home throughout the entire country is going for a record $243,000, which is up 2.1% from a year ago, and that's up 45% from pre-pandemic numbers. And part of the reason, obviously, for this huge uptick is because there are just no listings available. In fact, the total number of starter homes on the US housing market right now are 15% lower than they were just a year ago. And obviously, having this limited supply of different types of homes increases the prices, and that's why we're seeing things so high right now. Because even though the prices for these starter homes is higher than ever and the inventory is higher than ever, the transaction volume is still dropping, guys. Like, the sales of starter homes literally dropped 17% year over year in June, which kind of tracks with just home sales in general. Like, people are not buying and selling homes because most people simply cannot afford to at these prices. And it turns out there are only 3 metros across the entire country where you can buy a starter home for less money today than you could a year ago. And those places are San Francisco, Austin, and Phoenix. But to me, it sounds like there's really no such thing as a starter home anymore, guys. That's the reality. Like, paying these prices as a first timer and needing to be making 65 grand a year minimum to be able to afford a home, most people probably are not going to be in that position, especially when you factor in like the US median household income is somewhere in the 70K range. That's the household income. That's what everybody brings home that lives in that household. Now, the reason why home buyers need to have this higher income in order to be able to afford to buy in this environment is because the typical monthly mortgage payment for a starter home right now is around $1,610 a month, and that's up 13% from a year ago. And like I was telling you earlier, your lender qualifies you based on your monthly income. So if the monthly payment is now 13% higher, well, now you need to get 13% more income in order to be approved for the loan. Makes sense, right? Well, listen to this. The average worker is only making about 4.4% more money than they were a year ago. So if you need 13% more to buy a house, how does that math add up? Oh, wait, it doesn't, right? Because you can't buy if you don't have the income, guys. And basically what's happening is these prices are locking almost everybody out of the housing market. And it's been one of the main reasons I've been telling people that I think that the show is going to be over. You know, I just covered the other day that even investors are pulling back on purchases right now because there's no profitability left in being a landlord at today's prices and interest rates, as well as the rising cost of ownership. So you even have institutional investors becoming net sellers, selling more properties than they're actually buying. When you combine that with the fact that people's wages are not keeping up with the actual requirement needed to be able to even buy a starter home, the show's over because there's really nobody left to buy. You know, I've heard from a lot of you guys before, like, oh, the investors will come in and buy everything up. Well, they're not doing that. So who's going to be left, okay? When people don't have the income to purchase these properties, then this is going to be the downfall of all of it. And the only reason we haven't seen everything completely collapse yet is because we haven't seen a big spike in inventory quite yet. But here's the thing. Eventually we will get that inventory. It's not like we're never going to have inventory again on the market and everybody who owns properties today is just going to hang on to it. That's not how it works. Sometime in the future, people are going to decide to list, whether it's going to be because the economy is worsening and they're forced to list, whether it's because interest rates are finally coming down and they feel like it's a better time to sell. There will be something in the future that's going to trigger more listings to come on the market. And I believe when that happens, that's when we're going to see the biggest price declines. And if you're enjoying this video, please make sure you subscribe to the channel and give this video a like. Every single time you do that, it really helps the channel out and I appreciate it. But you know what, guys? It's not just first-time home buyers that are showing signs of distress and having trouble right now, or people who are in the low income category. In fact, even rich people are showing signs of distress in today's economy. And apparently, I guess the reason why we know this is because last week, American Express, they have increased the amount of money set aside for bad debts, just like banks. And American Express, I guess you could argue, is a bank because they offer checking accounts, at least for businesses they do. I don't know if they offer personal ones, but they have now put aside $1.2 billion to pay for any potential bad debts right now because they're anticipating more people defaulting on their American Express credit card payments. I knew we would find a crazy listing eventually, and here we go. We got a 3-bedroom, 2-bath house for $5.3 million. Super old, nothing fancy here. They're selling the land because it's a big lot, but obviously it's clearly overpriced because they've been trying to sell it since October last year, haven't budged on the price at all. All they did was take it on and off the market a million times, like you can see here, which doesn't work. That's not a good tactic. So if your realtor ever tries to tell you that, fire them. But anyways, property tax bill here, $39,000 a year, and the house only rents for $7,000 a month as of 2018. Unbelievable. So here's the thing that everybody needs to think about. If American Express, that typically caters towards higher income individuals in terms of extending credit to people, and they're bracing for impact in the form of $1.2 billion being set aside for potential defaults in the coming future, well, what does that mean for people who are on the lower side of things, people who are in the lower income side of the spectrum? And how many defaults are going to be coming from that end of things. So one person says the best way to gauge how people are doing in this economy is when you go to a get-together with either with family or friends, you find out what people are doing with their money, right? You find out what are they investing in, what are they excited about right now, and it kind of helps give you a gauge of the economy. And I think it is kind of a small anecdotal thing that sure can give you a little bit of a pulse on where people are at with things, but it definitely doesn't give you the big picture. Plus, you're always going to have people that are overly optimistic about where things are going to go. You're always going to have people who are overly pessimistic, thinking that things will never recover and things will be bad forever. And neither one of those scenarios is realistic, to be honest. So I think it's going to be interesting to pay attention to this in the long run and see, are people that have a lot of money actually going to be defaulting and not paying their bills? Because that's not something you would expect to happen, because people that have a lot of money typically have reserves, right? They have savings. They're able to withstand a downturn better than a lot of other people, for example. This house is listed for a whopping $12,995,000. And check this out. They bought this house back in 2002 for only $954,000, and now they think it's worth a whopping $13 million. Who knows if they'll be able to sell it at that price, but they did rent it in 2021 for $42,000 per month, which is pretty impressive because, that's a lot of money to get from anywhere a month in rent. And the fact that they actually rented it for this price is kind of unbelievable when you think about it. Literally right next door to the previous house is this one for rent at $12,500 per month, and this one is listed by the same listing agent but doesn't get the same fancy treatment with the nice sign in the yard. Just has this kind of little for rent by owner sign on the garage door, which is kind of crazy since it's listed by a real estate agent. But anyways, they have this house for rent. They bought it during the 2008 housing market downturn for $1,105,000 and then tried selling it the following year at a loss, but they never actually sold it. And fast forward today, they still own it, and they are paying a property tax bill of about $14,000 per year. Now here's something interesting to think about. Now that we know American Express is also bracing for impact with a wave of defaults, I saw something else interesting that I just had to share with you guys, because this is one of these help me stories that you come across where people write in, talk about their financial problems and things like that, and then an expert will reply saying what they think you should do or what the consequences will be or whatever, right? Well, in this case, you have a guy who's 28 years old and he owes about $15,000 in credit card debt, and he hasn't made a credit card payment in about 3 years. So he's been pretty much dodging paying the credit cards for quite some time now. And his question was, if I stop paying and try to ride this out for at least 4 more years, I heard that after 7 years, they can't report the non-payment on my credit report anymore. So basically, I'm going to be free and clear, right? So is that actually the case? Now, before we get into the actual answer of that, the one thing I want to point out is just the mentality of this right now, that you have somebody saying, I have $15,000 in credit card debt. They're claiming they cannot afford to pay it off, which is why they've been dodging it for the past 3 years. And they don't have anybody to rely on to ask for help, anything like that. And that's why they're just saying, I'd rather just take my chances and not pay this and deal with the potential consequences than even try to pay it because I know I can't afford to. That shows us a couple different things. Number one, it shows us that people who are supposedly in like the first time home buying age group, that's 28 years old, are not doing so well financially. If you can't even pay off your $15,000 credit card bill, how are you going to save for a decent down payment and be able to buy a home? That's number one. Number two, just goes to show how everybody wants something for nothing these days, right? You have everybody with the student loans wanting to get bailed out from that and just not have to pay anything back anymore. You had all these people that took the PPP loans and the EIDL loan money that just wanted to get free money from the government that you never have to pay back. And then you got people like this that rack up the credit card debt and say, yeah, I don't feel like paying it back. I'm saying I can't afford to. Whether or not that's true, who knows? But they're claiming that they can't pay it back. So what happens if you actually were to do that? Now, first of all, it is true after 7 years, if you have an unpaid debt, that a creditor is not allowed to report that any longer to the credit reporting agencies. But the clock doesn't start ticking until 6 months after you are in a non-payment situation. So it's really more like 7.5 years that can go by before they're legally required to stop reporting that unpaid debt to the credit reporting agencies. But here's the other key to this. If at any point you do make even one single payment to that unpaid debt, then that completely restarts the clock and they can go back to starting off at 7 years again of reporting that on your credit report. So that's why this 28-year-old, they're trying basically to do a strategic default here, and they're not paying on purpose at this point because they don't want to reset that 7-year clock. They're almost halfway through it, right? Not paying for 3 years. But what can happen is if you're in a position like this and you start ignoring your debt entirely, then a lot of times what the creditor will do is they will sell your debt to a collections agency, and the collections agency will be the ones hunting you down for the debt from there on out. They're not going to just come after you for the debt, but they're going to come after you the debt plus interest plus late fees and all different types of things, collection costs that they have that it's going to take in order to actually recover this money from you. And if it's substantial enough, they can actually file a lawsuit and sue you. However, each state has statute of limitations laws, and each state is different. So you would actually have to check what the statute of limitations are in your state, and this can be anywhere from 6 years and all the way up to 10 years that a collections agency would have in order to be able to collect that debt from you. And if that amount of time passes, depending on the state you're in, they'll no longer be able to collect it. So people that are in this situation where they're basically trying to dodge the creditors are basically playing a game of chicken here, seeing how long they can not pay the credit card bill and get away with that, and how long they can dodge the collections agencies before the statute of limitations kicks in. But here's the problem, guys. If you do end up getting sued, you're going to need to hire a lawyer. So if you can't afford to pay your credit card bills, I'm not sure how somebody in that position could actually afford to hire an expensive attorney. And guess what? If the creditor or the collections agency that is suing you actually wins the lawsuit, they can now garnish your wages and even freeze your bank accounts in order to get that money back from you. So this can get very ugly very quickly if you're somebody in this position. If you own a home, if you own a car, they can place a lien against your property. So that means if you sell that car or you sell that house, they'll get their money that way. Also, what will happen sometimes is you could end up in a settlement deal where they'll say, well, pay us this much and we'll let it all go. And that could actually end up being the best outcome for a lot of people, especially, if you're facing the alternative of losing your house or something like that. And if there's a court order that's saying you need to pay X amount or else, and you don't, guess what? They can arrest you and throw you in jail. So this can get pretty hairy, and you can end up in prison over this kind of stuff. But then the question becomes, will the collections agency or creditor actually go through the hassle to sue you? Because it is a hassle to sue. It costs money to sue, and especially if the amount that you owe isn't substantial enough, they might decide, you know what, it's not worth it to sue this guy. We'll just let it go. So there is a possibility you could get completely off the hook, but you're basically playing roulette, or you're betting on black, and if it hits on red, you're screwed. According to a 2017 report by the Consumer Financial Protection Bureau, about 15% of delinquent debtors were sued for money that they owed. So it's not a huge risk in the sense that only 15% of people were actually sued and had to actually face some consequences from not paying. But like I said, you're taking a pretty big risk, because if you end up in that 15%, then you can be in trouble. In fact, this is something that a lot of prisoners do that owe a lot of debt. If they're facing like a 10 or 15-year prison sentence, they know that the statute of limitations doesn't go beyond that, and they won't be able to be sued or for this debt or even be required to pay it, because they're locked up and there's nothing that these creditors can even take from them, because they don't own anything. They don't own any houses, they don't own any cars, they own nothing, and they're locked up. So they end up just defaulting on this. And the worst part is all of us, the US taxpayers, end up ultimately paying the bill, right? In the form of either higher taxes on something, or in the form of companies raising their prices on their services or goods in order to compensate for these losses, one way or another, the people who end up doing the right thing are the ones who end up paying for all this, which is the ultimate sucky part of that. But the financial advice that this advisor gives is, if you find yourself in this situation, really the best thing to do is to not run away from it. They're telling people that you want to get in touch with these creditors or collections agencies, whoever is hunting you down for the money, and try to strike a deal with them. You know, tell them, hey, I have X amount of dollars. If you owe 15, say I have $6,000. Will you take this? Will you accept this as a payoff and erase this debt? Whether or not they'll say yes or not, I don't know. But at least you're trying to make a deal and trying to get out from underneath this, rather than, you know, run away from it forever until it snowballs into a problem where you end up in jail. And that means you need to be saving money and being financially responsible along the way in order to potentially make one of these payoffs, or you could use that money to hire an attorney in case you do get sued. But one way or another, you're going to need that money, is basically what they're telling people here. And the crazy part is, if you're in a situation where you cannot pay your credit card bills, what are the odds that you're going to have this kind of savings to actually pay for an attorney or make a settlement deal with these companies? I would say the odds are slim to none. But anybody who's serious about trying to get out from under one of these non-payment credit card situations, they're supposed to speak to a certified credit counselor in order to try to figure out some sort of repayment plan. And the other part of this would be to try and build up your credit in other ways. Like, say you're choosing to take the chance and default on these credit card payments. Well, then the idea here is you still want to pay everything else on time, because once this 7-year term is actually over, then you'll be able to start rebounding and building your credit score back up quicker than if you're just defaulting on everything and not paying for anything. That's really not a good spot to be in. So basically the advice here is, if you have a debt that you are late on or you can't pay, it's better to pay for the things you can still afford, like your house or your car or whatever, and just not pay for the credit card payment, rather than just stop paying for everything altogether, because that's just a way to drop a bomb on your entire life, really. But I don't know who wants to live their life like this, like constantly being chased by creditors and collections agencies just to dodge a $15,000 credit card bill. I mean, it sounds pretty crazy, guys. And I know $15,000 is a lot of money. I'm not saying that it isn't. But if you ever want to have anything in life, you ever want to have a car, have a nice place to live, or own your own house, or anything that requires any sort of ambition, you know, you need to learn how to make $15,000 and how to save $15,000 and put that money to good use. Because if you don't, then you will never have any of those things. So really, I feel like people that are in this position and they're intentionally not paying and trying to get out of it for whatever reason, is just kind of like teaching them their own selves bad financial behavior that's not going to bode well for their futures. And you know, once you get in this cycle of figuring out, oh, I can not pay for this, or I can pay that late, or whatever, I mean, your life is going to be a financial mess forever. So yeah, could you potentially get away with not paying credit card bills forever? It seems like you can. But it's kind of a flip of the coin, right? You're taking a chance that maybe you'll be one of the lucky ones who does get away with it. Maybe you won't. So there's that. If you enjoyed this video, please make sure you're subscribed to the channel if you want to see more like it. And if you don't want to wait for my next video to come out, make sure you check out this one on the screen right over here, and I'll see you in the next one.